Good evening. Welcome to another edition of Mind Your Business. In tonight's topic of discussion, brought to us by the ANZ Bank, we'll have guest speaker Paul Gruenwald, ANZ Chief Economist of the Asia Pacific, who will discuss where we are in terms of the global economy in relation to the global financial crisis, which parts of the world are doing better or worse, and the challenges faced by PNG and the Pacific in general, with highlights and similarities drawn from emerging Asia.
Let me just set the stage. I've been traveling around a bit. You can probably tell by my funny accent that I'm from the US. So I was in the US in July and Europe in June, and there the focus was very much doom and gloom. We're talking about housing sectors having collapsed, banks being insolvent, now perhaps some governments being insolvent. So it's actually quite refreshing to come back to Asia and the Pacific, because the challenges faced by this region, including PNG, are actually good challenges. We have high growth, we have commodity booms, we're worried about inflation, and these are serious issues, but they're good issues to be facing, and they're good challenges and part of a success story. But the bottom line here is, China and India and Asia generally are continuing to lead the global economy. We're going to have a multi-year recovery in the US. I would say we have a number of years of 2% growth in the US, more or less. Europe obviously has to get through a very nasty debt crisis. As Mark mentioned, I worked at the IMF for many years, and I think the model for Europe right now is really Latin America in the 1980s. We had governments that basically spent like drunken sailors. They have too much debt. They cannot possibly pay back all the debt under any scenario. So the governments need to undertake austerity programs, and the creditors need to chip in as well. The creditors need to write down their claims. That's easy for me to stand here and say. It's actually a very complicated process, and politicians there, like politicians everywhere else, are being totally oblivious to the challenge. They keep pretending they have a liquidity crisis rather than a solvency crisis, but they're trying to kick the can down the road and hope things go away, and I think the markets are constantly reminding them that that is not going to be the outcome. So let's talk a bit about where we are in terms of Asia. The Asia growth story is quite good. I think I mentioned last year that Asia, according to our numbers, has fully recovered from the GFC. Oh, and by the way, my title here, I asked, is this the GFC all over again? And the answer is no. This is the same GFC. This is the sovereign phase of the GFC, but we're still working through the initial shock of 2007, 2008. Where is the global financial crisis current version going to show up in Asia? What should countries be looking for in terms of the risks? So I listed 3 channels here that I think are going to be important as we go forward. One is just the trade and growth channel. This region is not independent of the rest of the world. Countries rely on demand from the US and Europe. And if that demand is going to be weak for a number of years, which countries are going to be hit hardest? I think just in terms of the intuition, if we're thinking about a large economy with a big domestic growth story that's not very plugged into the rest of the world, that's going to be a relative outperformer. Countries like India, Indonesia, I would even throw China into that basket in some sense, we think are going to do relatively well and are doing relatively well. Some of the smaller economies, maybe we could put PNG in that basket as well. It's really the smaller, open, trade-dependent economies like Hong Kong, like Singapore, Taiwan and Thailand that are going to get knocked around a bit in the next couple of quarters. And indeed, those 4 countries I just mentioned are already contracting again. So there's a possibility we'll have some technical recessions in Asia this year. What the chart at the top does, and I stole this with attribution from my former employer, is it ranks the economies in Asia according to their vulnerability. So economists love to run these little scenarios and shocks. So what the economists of the IMF did is they put a 1% shock on US and European growth, and they saw how that fed through into Asia. But here, Malaysia, Thailand, Singapore, and Taiwan these would have the biggest impact from a global slowdown. Indonesia is over here with Japan. Those are relatively closed economies. They're relatively insulated from the rest of the world. India was not in this study. India I would probably put over here as well. Second risk factor is bank funding. Banks don't always fund all of their loan book from their deposits. They go into what is called the wholesale market and try to get funding, additional funding for their loans. The wholesale market can occasionally freeze up. If we have concerns about global banks, big global banks, we had this in the US in 2008. We're starting to see a repeat with some of the French and German banks now. That wholesale market for funding can dry up. So banks and banking systems that are relying on that market can hit a weak spot. This happened in Korea in 2008. We had a couple of wobbles in Australia at the same time. The good news is that those two countries I just mentioned are now less reliant on wholesale funding. So we think this is going to be a relatively benign channel, touch wood, this time around, because most of the banks in Asia are funding themselves from their deposit base. And as long as the deposit base is sticky and doesn't go flying off somewhere else, the bank should be in good shape. The third channel we're looking at is just basic balance of payments funding. Some countries run deficits, India, Vietnam, Philippines. In Asia, they're reliant or dependent on financing from the rest of the world. So they need to borrow some savings from the rest of the world in order to finance their growth and investment. When the rest of the world gets nervous, we're in a risk-off scenario. We're looking for safe assets. Funding tends to flow out of those countries at some times, and this can pose a risk as well. We're seeing a bit of that in India right now. You can see it through the exchange rate, but again, it's been moderate so far.
Welcome back to Mind Your Business. Tonight's program is focused on the global financial crisis. We join our guest speaker, Paul Gruenwald, to continue his presentation on PNG macroeconomics and the challenges of the global economy in the Pacific region.
Let me move on to the Pacific and then talk a bit about PNG, and I think the story in PNG is good. Just to prove that ANZ is a serious research shop, we just put out our analysis of the effects on the Rugby World Cup on Pacific GDP. So this was the first time I ever made page 2 of the Sydney Morning Herald, because about 2 hours after we put this piece out, it appeared online. What we did, and this is obviously kind of a lighthearted thing, is we looked at the World Cup history since 1987 and years in which the World Cup took place. What were the effects on growth in the Pacific? So this is where we came out. Tonga should be very, very happy. In years where we have a World Cup and Tonga's in the cup, growth is 1.3 percentage points higher in Tonga. I saw them beat Japan on TV last night, so I think the Tongans are very happy that it's a World Cup year, because this always corresponds to higher growth. The news is not good for Fiji. Here's Fiji during World Cup years. Growth actually collapses to nothing. This is particularly true when Fiji makes it into the second round. So we said, be careful what you wish for, because your GDP is going to collapse if you make it into the second round of the Cup. New Zealand here, we have a slight positive effect, and Australia is slightly negative. So, this is all in good fun. We actually said in the piece that although the chart looks good, this is basically statistically meaningless, because there's not enough power in the data to explain what's going on. But it was good fun. The Pacific, I think geography matters. I think that's something that we kind of overlook. But sometimes people compare the Pacific to the Caribbean. And the Pacific's in a good neighborhood, right? We've got China demanding hard and soft resources. We've got China's investment now flowing out into the Pacific and also into Australia and New Zealand. We've got Australia as by far the best performing of the industrial countries because of its trade links into Asia. So the Pacific and PNG are in a good neighborhood. We did a research piece, I think, a year or two ago, where we compared the Pacific with the Caribbean, and just because of the trade ties and being in a good neighborhood meant the Pacific did quite quite a bit better than I think the Caribbean, which is a good comparator group. So let's look at PNG. I think the story is good. This is my 4th day in PNG, and again, this is my 3rd year, so I'm getting a better feel for the place. We've been to Lae, we've been to Goroka, and we're in Port Moresby yesterday and today. I'm hearing a consistent story where, the LNG project is boosting growth, it's boosting inflation, it's highlighting some of the infrastructure and other problems in PNG, but this is a good story, right? It's a good story because PNG has the right resources, you're in the right neighborhood, and prices are quite high. So, the big challenge seems to be inflation recently. So inflation and growth are both pushing double digits, and I wouldn't be surprised if we had both in double digits at the end of this year. The question is what's driving this. The demand from the LNG project is driving it. Probably the capacity constraints are driving this as well. There doesn't seem to be a huge amount of credit in the system, so sometimes we see credit growth leading to GDP growth and inflation. That doesn't seem to be the case in PNG. It's just a good growth story, what's kind of stretching the capacity. Wage pressures, according to a survey from the central bank, are rising, but again, this is sort of a boom scenario. And again, the issue is how to tackle this. The central bank has raised the Kina facility rates. There's been some attempt to sterilize through the treasury market. The Kina is being allowed to appreciate, but with the high growth and the high global commodity prices, which I think are combining, inflation is probably going to be higher or above average for a relatively long period of time, as long as growth is high. Here's another illegible chart. I think I've had 3 of these so far. Again, the trade links with Australia are larger than any other country, and again, this is just the good fortune of being in a good neighborhood, having good things in the ground that other people want to buy. What we would look for going forward is bigger trade linkages with Asia. We've seen almost every country in the region increase its trade share into Asia in general and China in particular. So we do expect that to be continued as well. And it's definitely a commodity story. I've had a lot of questions about the Kina on this trip, and I think we've got to sort out what's going on. The Kina is being pulled higher or appreciating because of commodity prices. It's being pulled higher because of the Australian dollar. Yes, it's true that exporters are getting less Kina per dollar because the Kina is strengthening, but we have to remember that we have higher commodity prices. And the data I've looked at suggests that the rise in commodity prices is 2 to 3 times higher on average than the rise in the Kina. So yes, the exchange rate's stronger. Yes, that reduces Kina revenue to exporters, but this needs to be set against the backdrop of much higher commodity prices. Commodity prices are not only mitigating the effect of a higher Kina, they're actually making your income growth higher than your GDP growth. So if your GDP is growing by 9 or 10%, and your terms of trade are improving, which means your export prices are growing faster than your import prices, then your income is actually growing faster than your GDP. So although we're looking at headline GDP of 9 or 10, we're actually looking at incomes in PNG growing by even more than that. And the central bank and the government have to be cognizant that we've got a strong recovery, we need infrastructure, but we don't want to pump too much extra stimulus into the economy, because then we're going to have an inflation problem. But I don't see too many risks from a stronger Kina. That's a question we've had. There is a risk of what Australia calls a two-speed economy, where the part of the economy that's benefiting from a stronger Kina, which is the export sector, is doing well, and the rest of the economy is doing less well. I think that's something PNG needs to look at going forward. But the Kina is very much like the Aussie dollar, commodity currency. So when commodity prices are high, the Kina should be stronger, and vice versa.
Good evening. If you've just joined us, you're watching Mind Your Business. We now join David Conn with a one-on-one panel discussion with our guest speaker, Paul Grenwald.
Welcome back to Mind Your Business. With me in the studio this morning, Paul Grunwald, the Chief Economist with ANZ Bank in the Asia Pacific region. Paul, welcome, and welcome back to Papua New Guinea.
Thank you, David.
Third trip.
Thanks.
Interesting presentation this morning. I got the sense you said you'd been traveling in America, in Europe. A good place to be in the Pacific at the moment?
Yes. The mood's still pretty gloomy in the US and Europe.
Yeah.
US is getting a bit better. Europe's got some work to do with the debt, but the Asia growth story, the commodity story, Asia is definitely the place to be right now.
You said P&G's in the right neighborhood, and even mooted possible double-digit GDP growth.
Yeah, well, things look good here right now. I mean, we see growth 9% this year, maybe 10. It's a good neighborhood because Asia's driving global growth. Commodity prices are high, and Australia is by far the best performing of the advanced economies. So P&G is very well situated for all of that.
There was a bit of an expectation, I think, because of the topic that we originally were talking about, and you were talking about another transatlantic storm. I mean, what lessons did P&G? P&G came through the global financial crisis the first time pretty well.
Right.
I don't think you were mooting another one, but what lessons has P&G learned, I think, from that?
Well, the things that P&G can control, for example, the debt levels. I think the debt level's been paid down, public debt level's been paid down over the last couple of years, so we need to use the high growth in revenue to make sure public finances are in good shape, and we've got some reserves to weather the storm. But
debt ratios in P&G now?
Public debt's about 25-26% of GDP. It's half of what it was 5 years ago.
And compare that with some of the European ones?
Okay, let's see. Greece is about 140, 150. Italy's 120. So much better shape here.
So we could buy a bit of that economy, I reckon. Huh?
The Chinese are thinking about that. I don't know if P&G's thinking about it as well.
Okay, there clearly doesn't seem to be much sympathy in Asia for what's happening in Europe now. I mean, you used the term spending like drunken sailors. Are we going to see some of these European economies fail?
I don't think we're going to see the economies fail. What we're not
I'll
getting
be allowed
now,
to fail,
yeah, I don't think they'll be allowed to fail. I think in the end we're going to have some form of pan-European bond, and the taxpayers are going to end up footing the bill, but it's clear that several countries, particularly Portugal and Greece, that's just too high. Something has to be done because it's not sustainable.
And they're just going to have to take the pain, but they may not do it.
Yeah, I think who's not going to take the full pain is the creditor banks. I think there's something's going to come out where they're going to have partial pain, but not full pain.
A lot of talk about Asia, emerging Asia. How important is the Asia economy and the outlook for it to Papua New Guinea at the present?
Well, it's very important for P&G. Most of the trade here has traditionally been with Australia, but we see the linkages to the rest of Asia rising. China, and to a lesser extent India, driving all these demand for hard commodities. So Asia's critical for P&G.
In that we're benefiting from those hard commodities, what's the forecast for the level of pricing at the moment?
We're pretty optimistic about the level of pricing. The key thing going forward is that China's going to be laying off the investment growth a bit, but we see the next wave coming from South and Southeast Asia, particularly India and Indonesia. They should be able to pick up most of the slack. So we've got pretty firm demand for hard and soft commodities over the medium term.
You raised a few eyebrows in your presentation when you said high growth and high inflation in Papua New Guinea is a good problem to face. I did see a bit of angst in the room when you said that. Why did you say that?
Well, I mean, the problems that Europeans are facing are insolvent governments and failing banks, and we don't have any of that here. So if you have high growth, high commodity prices, and high inflation, that's a good set of problems. They need to be addressed, but that's much better than having a financial crisis.
I see. I guess most people were thinking from the terms of the man on the street. They wouldn't necessarily agree with that.
Well, we want the benefits to filter down to the man on the street for sure.
And what's going on with the kina? Obviously we see the kina appreciating. What's the main drivers of that?
I would say the main driver is commodity prices. A little bit like the Aussie dollar, which is a commodity currency. When commodity prices are high, Kina's strong. Exporters might be complaining, but again, they're getting much higher prices for their goods. So it seems it's a kind of a barometer for the global commodity prices. So
and that strong Kina should reduce import prices. What other strategies can P&G take? Because I don't think that's being felt
to fight
coming through.
inflation.
To fight that rising
Well, we need to
inflation.
make sure the government isn't adding extra juice to the economy. We want the government to help the supply side of the economy with infrastructure and inflation, and not just throw money at the economy. And we need higher interest rates. We think the price of capital might be too low. So KFR 7.75, but the Treasury bill rates in the 3s and 4s. And I think we need to get the interest rates higher so that real interest rates aren't so negative. That's usually damaging for an economy.
Okay.
Welcome back to Mind Your Business. To conclude tonight's program, we once again join David Conn for another panel discussion with guest speakers from Business Mentors New Zealand, Ray Schofield, CEO of New Zealand Business Mentors, and Ian Furlong, manager of the Pacific Business Mentors Program.
The program Business Mentors and the Pacific Business Mentors Program, Ray, a little bit about it, where the idea came from, what it's all about?
Yes, Dave. The Business Mentors Program has operated in New Zealand since 1991, has been very successful, and based on that success, the New Zealand government some 2.5 years ago determined that it would be an ideal vehicle to support their economic aid by assisting the building of small business capability and to support generation of wealth and revenue and employment to the communities throughout the Pacific.
So Ian, we've now got a program called the Pacific Business Mentors,
Yes.
and you've brought that to Papua New Guinea.
Absolutely, Dave. Pacific Business Mentors Program, Papua New Guinea is the 6th Pacific country that we've become involved in, and we're here this week calling for applications from businesses who want to be involved.
What sort of businesses would be able to apply for this
We're
program?
wanting to talk to businesses with up to 30 employees,
Okay.
and small to medium enterprises. We're very happy to help local business people.
Any cost to business? I think that's the first thing most businesses ask, isn't it?
Yeah, absolutely. It's absolutely free thanks to the New Zealand Aid
Okay,
program.
so it's a New Zealand aid program, is it?
Yes.
Okay. Ray, it's been in the other countries in the Pacific. I guess there's no coincidence it's the 6th country. I mean, sorry, I've got to take the mickey out of you Kiwis all the time on that, but other countries in the Pacific you've rolled it out into?
Yes, 18 months ago, Dave, we started off with the Cook Islands, followed by Tonga, Samoa, Vanuatu and the Solomons. I guess because of the sheer size of the PNG economy, we wanted to make sure that we had the model up and running successfully.
You didn't leave us to last, you just
No.
had to get the model straight.
Right
Yes,
in the middle, Dave,
yes.
right in the middle.
So Port Moresby offers a significant opportunity, and to the point where just recently the New Zealand government has committed even further funding so that we can put multiple teams of mentors into the Port Moresby economy initially, and then we'll look beyond that once we've got settled.
Okay, all right. So this is your establishment visit, Ian.
Yes.
How has that gone? Have you identified businesses already?
Yes, we've had 2 public presentations so far. And
Well attended?
absolutely, we've been inundated with people coming in, probably up to 100 people.
Excellent.
And we're very, very encouraged by the result. It tells us that businesses in Port Moresby are looking for support, they're looking for help, and we're here to offer our helping hand.
I'm sure there's a few grimaces around the country when we say in Port Moresby, everybody goes Port Moresby again. Why specifically here in Port Moresby NCD? Is that just a bedding down exercise to get it established, or will it go to
Absolutely.
other centres?
Yes, we want to put some runs on the board first. Papua New Guinea is a big country by Pacific standards, and we'll start in Port Moresby, and then we have every intention of spreading out to other population bases as we go along.
Okay. Ray, part of the program you're working on also on local mentors. You've got mentors coming in October, the 10th of October. What sort of calibre of people do you get to be mentors in New Zealand, for example?
Yeah, we're very fortunate, Dave. We've got some 1,700 odd mentors in New Zealand, and from that we've been able to request that mentors put themselves forward. Some 150 have. Typically they're the cream of the crop.
For this one, yeah.
Yes,
Okay.
and we have chosen 5 excellent mentors to kick the program off on the 10th of October when Ian comes back with that team. Very, very good skills across a range of.
That brings us to the end of Mind Your Business. In this evening's program, we looked at the global economy in highlight of the global financial crisis in emerging Asia and the challenges to PNG and the Pacific. Hope you enjoyed tonight's program. Until the next edition of Mind Your Business, good night.